Welcome to Smart Project Concepts. We finally made it. What I call Smart Project Concepts is this is a university grade education in Forex. What you're going to see, there's going to be a bunch of webinars, bunch of videos down below. All these videos, they are recorded in a virtual class setting. It's like I'm here in the classroom and you're on the other end watching how we present things, present simple concepts on the whiteboard in a virtual class setting. Now, I know a lot of you members are older members of Market Fluidity and you're just getting into Smart Project Concepts watching this. There's nothing new. Some concepts are newer, but some concepts are even more broken down for a better understanding. For people who are new, I welcome you all to the best education in Forex when it comes towards simplicity. As new traders, there are a couple of things that happen, right? Psychologically, things go wrong. Mentally, things go wrong. You go into over trading, over risking. But once you truly understand what price is really doing, where market is really moving, how candles are really printing, all these things go away, which is why there are a couple things that we really focus on a lot in Market Fluidity and now coming into Smart Project Concepts. All these things, they go hand in hand, and technically, if you really truly understand how price is moving, why is it moving, when there's volume, when there's not volume, psychologically, your whole perception about trading gets better. So, take it slow. There's a lot of information. There's a lot of knowledge in this section and the Market Fluidity section. So what I'm going to say is if you are new, if you've maybe been in the Forex market for about a month or 2 months, I would highly recommend about Forex. So take it slow, give it time. Don't expect results in the next month, 2 months, 3 months. Give it at least 6 months to a year, following these concepts slowly and gradually, building a trading plan, refining your trading plan, and you're going to see a light at the end. This has happened to a lot of people. This is still happening to a lot of people, and a lot of new people are going to see that light, are going to see that light of profitability. That's what I call it, right? It's going to happen. So if you think it's not happening for you now, you just got to dial down on your risk, on your trading plan, on the time that you're going to trade, how you're going to focus, and all that stuff. So it's game time. Good luck and take care. Now, this may seem very simple. Buy support, sell resistances, right? Very simple idea, but you have to understand when are you actually trying to buy supports, when are you actually trying to buy resistances. So we're going to talk about two things. We're going to talk about trend trading, right? Trend trading, and we're going to talk about counter trend trading, and these two concepts are equally as important. So first, we're going to go over what's the trend, how you're trying to gauge market structure, how you're trying to gauge candles movements, and then we're going to talk about counter trends, because a lot of times what happens is for example, price starts to rally and price is rallying, amazing, perfect. What traders like to do is they're like, okay, you know what, price is rallying, and I see a resistance to the left-hand side, and because of that resistance, we will reject that area, and then you take a sell. So when you take a sell, essentially what's happening is you're trying to take the opposite trade of a price that's moving up. Or if price is moving down, like we say, falling knives, if price is moving down, you're like, okay, you know what? I see a support. And based on what I've studied is that we're reaching a support, there's no confirmation for buys, but I see a support, and I'm going to take a buy right there. And when you take a buy right there, or you take a sell all the way up over here, price starts to rally up. Or if you take a buy, price starts to keep on dropping down. And this used to happen to me as well, because we're trying to counter trend. We're trying to catch that wick trade. We're trying to catch that perfect entry to have a winning trade. So we're going to go over that. First, we're going to go over trend trading. Next, we're going to go over counter trend trading. The concept is very similar, very simple. This is why it's Smart Project Concepts, very simple concepts. But the only issue is you have to wait for the candles to print the way you should have them printed, right? So let's talk about that. All right. So what's the basics of a trend? Now, a lot of people know this as well. A lot of people have even studied this through our live streams, to our videos on YouTube, stuff like that. But it's always a good idea to go over the basic concepts, because the basic concepts are something that build your foundation, and a strong foundation is what you need to be profitable in the markets, because guess what? Markets are not complicated. Markets are just as complicated as you're going to make them. So we're going to go over that right now. So the basics of a trend is this: price moves up, we create a high, price comes down, we make a higher high, price comes down, we make a higher high, and so on and so forth, right? That's how price moves. Now, when we're taking a look at this from a candle's perspective, right? What happens? You have a candle that prints bullish. Now you want the next candle to move up. Next candle should respect the low of the previous candle right over here. So now we have a higher low and we have a higher high. Now the next candle has to respect the low of the previous candle and continue to push up. So this is the basic idea of price moving up, making higher lows and higher highs based only on candles. Now, we're going to go into trend trading. If I can find my magic eraser right here. Okay, found it. Awesome. Now, trend trading is really simple. You identify the trend, and the way you identify the trend is basically you see where the higher time frames are moving. Now, let's say, for example, you're looking at the daily time frame, and the daily candle, you see that, we're pushing up over here. You're like, okay, you know what? Daily candle has to move up. You look at the 4-hour candle, and, maybe the 4-hour candle is, somewhere situated like this. We have a candle like this. We have a 4-hour candle forming like this. And you have clean range to the left-hand side. And you're saying, okay, you know what? The 4-hour candle is also bullish because we're creating support. Okay? Now, the basic idea of trading a bullish trend is that you're waiting for price to create support. Make a note of that. To trade a bullish trend, you have to wait for price to create support. That support could be on the 4-hour time frame. That support could be on the 1-hour time frame, 30-minute time frame, 15-minute time frame supports. They are okay, but the problem with the 15-minute support is that the confirmation is weak. It's a weaker confirmation. So that's why we're looking at the, I would say ideally, the 30-minute time frame or the 1-hour time frame, right? So you have to look for supports on the 30-minute and a 1-hour time frame. Now, let's say that we are in a bullish trend, right? So we're going to remove this and we're going to draw up some proper examples right here. But this trend is also identified on the daily and the 4-hour. So if you have made up your mind that the 4-hour is bullish and there's a high probability 4-hour can move bullish, you have to wait for supports. The supports are formed on the 1-hour and 30 minutes. So let's say, for example, let's say, for example, we have a bullish candle moving up. This is a 30-minute time frame, moving up, moving up, moving up. We are moving up right here, okay? Awesome, we moved up at this point. Now, we have formed a resistance at a zone on the 30-minute time frame. Now, if you've gone through the section of zones and ranges, you may look at this and say, okay, you know what, Raja, based on that virtual class we did, price is at a 30-minute zone, and 30-minute zone is a very strong zone, so there's a high probability it can go down. Why can't we take sells? The reason why you can't take sells at this point is because, let's say you take sells at this point in a heavy bullish trend, and you have pre-London volume, London open volume, New York open, NYC, whatever that is, but the time is when there's a lot of volume, right? So let's say you take a sell. What can happen is, if you're not focused on the trend, is that the next candle can break this high right here and continue pushing up. That's something that can happen. So whenever you have a bullish trend, you're not looking for sells. No, you're looking for buys at this point. And we're going to talk about the condition for sells as well in a bullish trend. So let's say you have a rejection right here at this point, and now price starts to go down. We're moving further down. We're moving further down right here. We're moving down here. And let's suppose the trend is coming all the way from the bottom, and now you have a support form, right? This is a support form. A support is formed when you have a bullish candle closing after a bearish candle, right? The only forms of supports you're looking at are in uptrends. Always remember this all the time. Trend is your friend. Don't trade in consolidation unless you have a bigger range, right? And when in a trend, wait for supports formed. These supports could be in the, these supports could be a part of your 30-minute time frame, your 1-hour time frame, right? The higher the time frame, the better. But the 30-minute time frame, strong supports. Now, first things first, right? Your support is formed. You waited for the support formed in an uptrend. Perfect. You got your support formed. Now, at this point, you're measuring the range, right? Let's say this range on the 30-minute is about 30 pips. You got a 30 pip range. You got a support formed, and you're like, okay, you know what? I have enough range to take a trade for price to retest this high. Now remember this one thing. Whenever we're in a trend, whenever price is in a trending market and it makes a high, there's a high probability, there's an 80% probability that that high is going to be retested. And how is that high going to be retested if we're going to create support? So if we're creating support at this point, there's a high probability for price to continue pushing up if we're creating a support, right? And your stop is below this candle. That's it. That's all what you're looking at. It's a perfect example. This happens all the time. All the time it happens like, clockwork when there's times of volume. So whenever you have an uptrend and you're anticipating 4-hour candles to go bullish, you're anticipating the daily candles to go bullish, you're waiting for 30-minute or 1 hour to create support and to continue pushing in the trend direction. That's where you're only trading the bullish trend. Now, sometimes you can have different variations, and these variations could be like, you can have a bearish candle forming like this, and you can say that, okay, we got a bearish candle closing with a small body. This means that maybe the move pushing down, the volume of bearish candles moving down is decreasing because now you have a smaller body. Because always remember, the candle bodies are going to tell you how much volume there is in the market, right? So you have a bigger body, boom, you got a small body at this point. What are you trying to do at this point? Are you trying to wait for a support formed, or are you trying to take an impulse entry as the next candle breaks above this high without breaking this low? You're taking an impulse entry at that point, right? Because sometimes, if you're new, you're going to say, okay, I'm going to wait for a support form, and you're going to wait, and as you're waiting, candle starts to pump up at this point, and candle closes like this. And now you're like, oh man, I knew price is going to go up. How did these people take impulse entries? I don't understand this. So the more you see price move up without you being not in the trade, the more you're going to learn about impulse entries, because the more you're going to see, because when I first started about impulse entries, I would see price move against me all the time. And I would say, okay, why is price moving against me? And I'm not in that trade. How could I have been in that trade? So I'm like, okay, if trend is where price, makes a higher high and a higher low and all that stuff, and if this candle is respecting this previous candle's low, which means it's making a higher low, and if it's breaking above this high right here, this means that it's making a higher high. So if I can take an entry as it's breaking the high and have my stop below this candle or even this candle, maybe and if the trend is up and there's volume, maybe I have a higher probability of winning that trade with an impulse entry. Make sense? So that's how this whole impulse entry thing came into being, by watching price move when you're not in that trade, right? So go over these things, right? Go over this virtual class again. Now, let's say we have created a support, right? So we're going to talk about this. So let's say we've created a support right here. Let's say we've created a support right here. Now we have a support at this point. Now, okay, let me just bring this up here a little bit. And we're going to talk about counter trend trade when price is trending bullish, all right? So let's say that price is, when the trend is bullish, okay, my bad. Let's do this, right? So from down over here, price is moving up, price is moving up, price moves up, and then boom, we have a resistance formed, and we have another resistance formed right here, bearish candle, more bearish candles coming down, like this, right? Awesome. Now, all of a sudden, we have a support form right here. Now, if you're trying to take sells in a bullish trend, again, you have to wait for a support form, right? Now we have a support form at this point. Now, if we think that the price can go down, you have to wait for price to break support, right? In essence, you have to wait to see whether you can get a bearish candle forming like this, closing below the support, because one candle closing bullish after bearish candle, boom, you got support form. Now, if you want price to go down, you have to wait for a candle to close below support in a bearish form, and now you can anticipate the next candle to continue pushing down like this. And in this case, we're going to wait for, an impulse entry to break this low and go down, because now we're going to say that, okay, even though the trend was bullish, we created support, and support meant that price should go up. But if the next candle didn't break the high right here, and it broke the low, closed below, maybe we can be fluid in the markets. That's what market fluidity is, right? Maybe we can be fluid in the markets, and we can identify that, okay, maybe we're not trying to go up now because now we've broken support. Maybe there's a high probability for price to go down. Okay, the more you see this happen, the better you're going to get at it. This is a perfect world example. There are also variations of these, right? There are a lot of variations of these. The candles can close with small bodies. The candles can close with, big bodies and stuff like that. So let's say you got a support right here, and you got a bearish candle that's closing like this, and then you can get another bearish candle that closes like this. So then you can anticipate price to go down. And as we talked about impulse entries, you can go over that and zones and ranges. That if let's say this candle closes away from this support, what are you going to do? Are you going to take a sell, or are you going to wait for price to retrace? Because the further away we move from a zone, what happens? The further away we move from a zone, the higher the probability of price to retrace, to retest that zone, right? So you have to wait for price to print in a way that you can understand. So if we're closing like this, then you're like, okay, you know what? There's a high probability that price can go down. And always remember, there's a lower probability we can go right back up, So you're always trying to trade when there's a higher probability, for price to continue moving. Now, this was for uptrends. Now, obviously for downtrends, it's the opposite. So we're going to go over that now. So let's say, for example, you have candles pushing down. You got a bearish candle, you got another bearish candle right here, and then you have another bearish candle. People love when price moves down, right? We love when price moves down. And then we have another bearish candle starts to move down. Beautiful. We have a nice trend going on over here. 4 hour expecting to go down. Daily is expecting to go down. You're like, awesome, perfect. This works amazing. Now all of a sudden, you have a bullish candle forming right here. Boom. We got support formed. In a downtrend, okay? Don't forget, this is a DT, downtrend. This is a downtrend. Now, whenever you have a downtrend, and if you're trying to take a buy at this point right here, and it's a very, very volatile pair, let's say it's gold or pound yen or whatever high volatile pair you trade, and it's a downtrend, there's a possibility that if you take a buy right here, the next candle respecting this high, it can continue pushing down. You got to keep that in mind. So whenever you're trading the trend, don't fight the trend. Wait for the trend to show you some signs, right? Because having good signs is a good form of trading. So now let's say you got a support formed, next candle starts to move up, next candle starts to move up, and then we have, boom, we have a resistance form right over here. This is a 30-minute resistance. This is a 15-minute maybe, but I would say a 30-minute or a 1 hour resistance. We've gone over these situations over and over and over and over again, right? Now you have a resistance formed. There's a high probability for price to go down. Now another thing, you have to make sure that this is a tradable range. I would say like minimum 30 pip range. If this is a tradable range, you can have an easier move going down. Because whenever price makes a low, there's an 80% chance that price will retest that low. You have to wait. Whenever you have a downtrend, don't fight the trend. Don't take a buy. Wait for price to create resistance and then continue down. Now, sometimes what can even happen is that without price retracing all this way up, what can happen is that you can have, let's say, a bullish candle form, and then you can have a bearish candle form like this, right? Now what do you have? Boom, you have a resistance formed. Now is this enough range? Well, candles with no wicks, what wicks, we already talked about that. Now, is this enough range? Do you have enough range to take a sell? Absolutely not. Now price is just consolidating. Same thing goes for when price is trending bullish, and retraces and whatever. Bullish, retraces, create support. Yeah, right? The same thing. So at this point right here, there's no sells at this point, right? The only thing that you can do is that if a next candle, let's say we break above this resistance right here, we've broken above resistance on a 30-minute time frame, so that means we've broken above a strong zone because 30-minute zone are stronger. Now you can anticipate the next candle to correct the move that we had earlier on, which came down. So that's clean traffic to the left-hand side. Makes sense? Now, this is where you can take a counter trend trade. In the same scenario, okay, now follow me right here. In the same scenario, let's say that this candle closed away from a zone. Let's remove this arrow. Let's say that this candle closed away from a zone. Can you take a buy at this point in downtrend? Absolutely not, because we moved away from the zone. There's a high probability for it to do a retest and then potentially go up or come down, and this whole thing becomes a fake out. We've talked about fake outs as well. So whenever you're trading, you have to wait, or let's say whenever you're trading a downtrend, you have to wait for a candle to create some sort of a resistance. Now, this resistance can form with a bigger range or small range. If it forms a small range, this is maybe what, like 10 pips? What are you going to do with 10 pips? Nothing. Then it's better off to wait for price to break support or close below or give you some more confirmations that we can continue to push down. But again, if you're trading counter trend in a downtrend, you have to wait for price to break resistance. No, form resistance first and then break resistance. So if we break above this area, then you can say, okay, you know what, maybe now we can correct that move. Okay? Now we have to go over this again. Go over this class again, this virtual class. These are very basic concepts. These situations do occur in the markets, and the more you familiarize yourself with these concepts, only in times of volume, they will play out in your favor more often than they're not going to play out in your favor. All right, so trend trading, as simple as it may seem, it really is that simple. But the main idea is you have to wait for candles to print in a way that you can recognize for you to take a trade. So we're going to go over that again. If you're trading an uptrend, you have to wait for support to form. If you have a support form, then you can take a look at how the support is formed. Has the candle closed, a big body candle, small body candle, a bearish or bullish, whatever that is, but the support is formed. If you're trying to sell in a downtrend, you have to wait for support form, and then you have to wait for support to break with confirmation. Same thing goes for downtrends. If you're trading downtrends, you have to wait for a resistance to form, right? If you formed a resistance, then you have to wait to see if you have any, candle confirmations, candle closing bearish for you to take a sell. And if you really want to sell, or if you really want to buy in a counter trend when it's moving down, you have to wait for resistance to break. Right? The only way you're waiting for a resistance to break is in a downtrend to maybe correct that move up. Or the only way that you're waiting for support to break is in an uptrend to correct that move down. Right? Important concept. Go over this virtual class again, maybe 3 or 4 times. Some of you may already know these things, but it's always a good idea to go over these simple concepts, because sometimes we miss certain things. Sometimes we ignore certain things, and that one quick thing can light up a bulb in our head, and I'm like, oh yeah, you know what? That actually made sense. That really did make sense. So good luck. Look for these situations in the charts. Only in times of volume. You got your pre-London, London Open, pre-New York, New York Open. Well, pre-New York volume has shifted a little bit, so NYSE, London close. Good luck.